What's up, everybody? Welcome to the Stocks channel. For the rest of 2023, I'm going to add one more stock to the daily analysis, and while I do believe most of you are going to ask for Nvidia stock, leave a comment on which stock you want to be added to the daily analysis, and whichever stock gets the most votes will be the stock added to the daily update. Alright, today's SPY was up 0.46%, and we're continuing that bull breakout ever since we broke out of this consolidation wedge above 460, and we're pushing through the next price target above 462, and above that we are going to be pushing towards 467. Now, I do want to caution you very quickly. If we zoom in here, you can see we did close outside that upper Bollinger Band. And anytime price action starts getting outside the upper Bollinger Band, it is getting a little too far overextended, which always increases the probability it needs to cool down. So with this bull breakout, we want to watch the 5 EMA first and foremost, and that's going to be in the low 460s and that breakout of that price target at 462. And if we go any lower than that, we want to watch the breakout right here, right around 460. And of course, the critical support at 458, which is also going to be around where the rising 20 daily moving average is. So the critical support zone for this very vertical bull rally is still 458, and as long as we're above 458, it's going to be very difficult to short this market because we're likely heading higher. Above 467, we go all the way higher into the 470s and start testing those previous all-time highs. So if you want to short, you really need price action to start breaking through critical support, and the first level of critical support is right there at 458 and then 451 if we break below that. On the NASDAQ 100 triple Qs, we were up 0.8% today, and the triple Qs also had that bull breakout above 391, and we pushed right through that price target at 396, and above 396, we will be looking for 404. Now, just like SPY, we are outside this upper Bollinger Band, and these Bollinger Bands are very squeezed, so while that doesn't guarantee we can't continue to push higher towards the price target, it significantly reduces the probability we go straight there without some type of cooldown. And during that cool down, expect these Bollinger Bands to expand, allowing us to continue to push higher. So if we start to pull back, look for support right there at the breakout at 396. And if we can't hold 396, we come back down to 391, which is also going to be the rising 20 daily moving average. If at any point we break down below 391, then we'll be looking for this critical support zone at 383. And if we can't hold 383, then we come down and finally fill this open gap at 378. But again, do not assume that gap has to fill now. Like I said last night, it's possible we continue to push higher and then go fill that gap at a later date. There is no guarantee when these gaps have to get filled, even though I do believe this 378 gap is going to get filled. We just don't know exactly when, and that is why we follow the price action. So if you're one of those traders that wants to short the market down to the gap fill, you need to wait for price action to break down below support, and the first critical support to break will be right there at 391. On the Dow Jones, we were up 0.47% today, and I told you above 363, we would likely go straight towards 367, and we are extremely close to that price target. And again, these are pushing the previous all-time high levels, so if we do continue higher and we start breaking above these price targets, it's possible the Dow Jones makes a brand new all-time high. So in the Dow Jones, watch the support at the breakout at 363, and if we break below 363, we're looking for support at 360, and then below 360, we're looking for 356. On the Russell 2000 IWM ETF, we were down 0.1% today, and while the Russell is not pushing higher like the rest of the indices, there's really nothing bearish on the chart as long as we're above this breakout at 186. Above 186, we'll be looking for 189 and just below 191. And if we can't hold that support at 186, then we could come back down towards 183 and 181. And as long as we can hold above all of that support and continue to make higher lows and higher highs, there's no reason the small caps IWM can't continue to push towards 200. On the ARKK ETF, we were down 0.31% today, and ARKK is still struggling around this zone. And on the hourly chart, we are very close to completing an hourly head and shoulders pattern if we break down below this support right around 48. And then below 48, we'll likely come all the way back down towards 46 or 45.7. And then below that, we continue lower towards 44.6 and 43.25. So this is going to be a very important test, and the bulls need to break that resistance at 49.3. And if the bulls do get the breakout, then we can continue pushing higher towards 50.7 and 52.3. On the VIX, we were down 4.43% today, and the VIX made a substantial breakdown today because I told you all year long we were bouncing from this support right around 12.8, and today the VIX broke down to levels we have not seen since 2020 before the March crash. And that's VIX levels all the way down here right around 12, and intraday we even hit below 12 and hit the bottom of the VIX Bollinger Band. So this means there's just no fear in the market, and that doesn't guarantee this is bearish. Low fear in the market and VIX levels this low has been seen in many bull markets in the past, so there's no surprise here. But don't rule out the possibility we could see a spike in volatility if the indices do start to pull back and break a critical support zone. In the event the indices do break a support level, look for the VIX to spike higher towards 15 to 16. And again, because we're in a bull market, that would simply be a pullback within a bull trend until we start seeing a shift in the trend of higher highs and higher lows to lower highs and lower lows. On Bitcoin, we're currently down about 0.25%, and Bitcoin is still testing the support at the rising 20 daily moving average right around 40,000. Keep in mind, Bitcoin went way too far, way too fast outside that upper Bollinger Band, and that's similar to what we're seeing now on the indices, and then Bitcoin started to pull back. So I know many of you have been asking, is Bitcoin a leading indicator of the stock market? And while it's not necessarily a perfect correlation, it is a good indication of risk on sentiment, and because we are getting risk on sentiment in Bitcoin, it's really hard to say Bitcoin is not going higher until we lose the bull trend, and the bull trend is intact as long as we're above 40,000. So if Bitcoin can bounce off 40,000 and come higher and break this resistance, then we just continue to push higher towards the next price target at 47,500. If we break down below the support at 40,000, then we could come back down to the breakout at 38,000. On Tesla stock, we were down 1.14% today, and yesterday I told you that Tesla was broadening out this wedge, and as long as we were above the support at 234, the bulls were still above support, and as long as we were below this resistance between 244 to 246, the bears are still below resistance, so we're getting higher lows and lower highs, which is a neutral pattern, and during a neutral pattern of consolidation, we don't want to try to guess the breakout direction, we simply want to wait for the price action to show us. So the bulls will need to break the resistance between 244 and 246, and on a bullish breakout, the price targets will be 255 and then 260. The bears will want to get a breakdown below 234 to 230, and below that we'll be looking for a gap fill at 225, and a continuation lower would bring us back down to the breakout at 222. So be patient here, and you can trade the range between this support and resistance, but there's no directional move in Tesla until we see which direction the price action breaks out. On Apple stock, we were up 0.79% today, and Apple did bounce above that rising 20 daily moving average, and we did hold the support retest at 191.5, and we did fill the gap that was open just below 194, so it does look like Apple is continuing the bull pattern as long as we continue to hold above 191.5. This is a bull breakout and a bounce of the retest, which could easily take us to the next price target higher at 197 as long as we're above 194. And do keep in mind the previous closing high will be a resistance right around 195.8. If we get rejected and we can't break the previous high and we get a lower high instead and we break the support at 191.5, then we'll be looking for the next support lower at 190, and then below 190 we have a gap to fill at 186. So jumping back over to the S&P 500, this is clearly a continuation of a bull breakout, which we've been talking about, the break of this range giving us the next direction, and we clearly see the bulls were winning that battle by getting the break above resistance and continuing to push higher. There is no doubt we are getting overextended in the short term, which simply means the price action is above the upper Bollinger Band on the daily chart, and once more, that does not guarantee we cannot continue to push higher. It simply means we're getting a little overextended, which means price action may be due for a cool down before we can push any higher. So as always, follow the trend, and the trend is still currently bullish, and the only way we're not going to be bullish on this market is if the price action tells us not to be. That way we're not guessing, we simply react to the price action, and right now this price action is still telling us it wants to go higher. So this is going to remain a bull trend until it's not, and the only way we'll know it's not is by following the price action each and every day around these critical levels. So always remember to manage your risk around these levels and have a trade plan prepared for any scenario. And if you continue to short a bull rally, you are going to have a very difficult time in this market if we just continue to climb higher and break out to new all-time highs. So make sure you're checking your bias at the door and only trading what the chart is giving you. And right now the chart is in a very bullish configuration. That doesn't guarantee it can't go lower, it just proves that it's bullish until we have proof that it's not. We are absolutely crushing this market on bank trade alerts, continuing to make brand new all-time highs week after week. So if you want to come crush the market with us, you can find out how to join bank trade alerts by clicking on the link below. I also have the Stocks Channel Discord where you can get access to all of my intraday updates and analysis. And if you're interested in either of those services, you can find out how to join them by clicking on the links in the description of this video. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.